Time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Westin, joining us as he does every day at this time. And we want to continue our extended coverage of what's going on in the labor space here. Of course, strikes in Hollywood, strikes in the LNG space, and of course, obviously, the big auto workers strike going on right now.
Yeah, we'll move from Hollywood, which you cover, over to Detroit, because obviously there was a big development today as they announced expanded strikes for Stellantis as well as for General Motors, with Ford getting a pass at least for now. And we sat down actually with Stephen Rattner. He, as you know, supervised the restructuring of the auto industry under President Obama. He was there when they really created some of the things that the UAW is complaining about now. And we asked him just how bad this is. This is Stephen Rattner. He's the chair of Willett Advisors. They invest the philanthropic and personal assets of Michael R. Bloomberg, our founder and majority shareholder.
It does certainly look tougher than I've ever seen in any of these contract negotiations. First of all, the UAW's demands are, even by the standard of opening demands, pretty extreme. Secondly, they're conducting this negotiation largely in public, which makes it harder for the union in particular to back off their positions if and when they need to. But all that said, there's never been a strike that I know of that hasn't gotten resolved one way or another, and it's not hard to see a resolution here, but I think the mood is that it's going to take a good while.
You have written in the New York Times that you certainly can understand why there needs to be more wages for auto workers. They've lagged behind for various reasons, inflation, but also the contract that they had. At the same time, it's about more than just money, is it not? Because the auto workers say you're going to electric vehicles, which will require fewer of us. And on the other side, the auto industry says we have to go to electric vehicles or we're not going to be in business anymore.
Look, the classic Harvard Business School case is that a company or an industry that tries to protect an old business model when there's a new one coming ends up failing. If the Detroit companies want to be competitive, if we as a country want to have a viable domestic auto industry, and by the way, it is the government's policy to encourage electric vehicles, then we have to welcome this change, and there will be displacements, and we have to deal with those.
I guess I'm asking, how much of this do you think in the end is about money? How much of a raise people get, because everyone agrees they're going to get a significant raise, and how much of it is more fundamental things about the way the companies actually run their businesses?
I think it's mostly about money or money-related things. I think, yes, there's a lot of concern about the future number of jobs and so on and so forth, but I'm sympathetic to the union in the sense that if you look at the last 15 years, auto workers as a whole in this country have basically stayed flat after inflation, whereas other workers have gotten some after inflation real income increases, and there are good reasons. There are reasons for that, which is the fundamental competitiveness of the auto industry on a global scale. But nonetheless, in a world of 3.8% unemployment and 1.5 jobs for every American, I can understand why these workers feel like it's time for them to get a bigger share.
Last week, President Biden weighed in on the issue, and at least to my hearing, weighed in pretty heavily on the UAW side, saying there had been record profits out of the car industries and there should be a record deal, I think he called it basically. Is he making the situation better or worse? In the port situation, I don't recall him weighing in that heavily on the worker side.
I think that's fair. I think we are closer to an election. I think we're talking about the Midwest, which are swing states. I don't think California is ever going to be a swing state. But I have to say, I don't think it's overly helpful for him to put his finger on the scale. Look, the politics are what they are, and I get that, but this is a tough situation, and I think there are equities on both sides.
Whenever we have a very large conflict like this, in my experience at least, there are unintended consequences. There are the principal players and who does well and who doesn't, but there are people around the side. I can think of people like Tesla, other automakers around the world, certain states, that are right-to-work states. What are the unintended consequences, you think, perhaps, of this dispute?
Look, the unintended consequences are what happens to the number of jobs, not the price paid for each job. The yin and the yang of this, and it's a tough one, is that the more the auto workers get paid, and I'm in favor of them getting paid more, the fewer jobs they're going to be. That's just the inevitable result of this. If you look, for example, back since 2009 at the number of jobs that have moved to Mexico, and the fact that there are now more auto jobs in Mexico than there are in the United States, it tells you something about how capitalism and free enterprise works. It finds the lowest cost locale that can meet its needs.
Are there potential consequences for the transition to EVs? I mean, I think most people think we're going to make the transition, but could it slow it down?
I don't think on an overall basis it slows it down because there's so many players in the EV market. I think it affects who the winners and who the losers are. I think for the Detroit companies to be winners in EV, they need help from the unions. They need cooperation from the unions. And we'll have to see how that unfolds. But if the unions make it tougher for them to produce EVs on some economically rational basis, then the Detroit companies are going to end up being the losers in the EV race.
Tesla, thus far at least, is a winner. They do not have unions, as last I recall. In fact, President Biden has been somewhat critical of Tesla at various times for that very thing. Tesla already is doing pretty well, as far as I can tell, on EVs. Does this give them yet another head of steam?
Well, it's not just Tesla, remember. The automakers in the South, most of them foreign imports, transplants, Honda, Toyota, the German companies and so forth, they don't have unions either. And so it's not just Tesla, but yes, the cost differential, the more it becomes a differential, the better it is for Tesla, the worse it is for the Detroit companies. I do think it is fair to say, though, that labor costs are not the biggest cost of a car. I mean, they're 4, 5, 6%, depending upon whose numbers you believe. But these are also companies that operate in very thin profit margins, and so you do still have to be careful. But I don't think this contract necessarily is going to determine the future of EVs among the Detroit companies.